Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this document last year was included in your annual report that we gave out at a regional board training. So if you wanted to compare some of this information to last year's, you could look inside the annual report. It's not. It has more than just this information. It has the academics, compliance, and governance information as well. But that this type of information was included last year. This year, due to the conflicting dates between academics and finance, we broke this out into its own piece. And instead of having a separate regional board training, we decided to bring these to you directly through video with your school's information specifically. So we hope you enjoy that. So this document takes the audited financial statements, summarizes it into 4 pages, and then makes it easier to look at quickly and comparatively from year to year. So that's kind of why we utilize it and created it, and we thought we'd bring it to you as we have in the past, just a different method this year. So with that, we'll get into the review sheet. So over here, we'll start over here at statement of net position. These numbers are all derived from the audit. So to show you that, we'll look at total assets as an example. So total assets are $9,396,270. So I'll jump to the audit real quick. Here's the statement of net position. Here's the assets, here's the numbers, and then here's the total assets, $9,396,270. So I encourage you to verify these numbers, look through these, make sure they're all what they should be. For time, I won't do that, and we'll go back to the review sheet. So if you notice down here, there's ending net position and then previous net position. So ending net position is the June 30th, 2014 net position. Previous net position is the June 30th, 2013 ending net position. So this is a quick way to look at the change in net position from year to year as these sheets roll out and as you look at this one. So you'll see that there was a large increase in net position. So before I move up, I'll move down real quick. The balance sheet, current assets in the balance sheet general fund classification. So these are current assets in the general fund, and then these are general fund classification. So I'll go back to the audit to show you where this is from. So the balance sheet is 2 pages after the statement of net position. So 1, 2. Here's where it says balance sheet. Again, these are general fund assets. So it's important to look at the food service fund, the debt service fund, any other funds. And we do look at that information, but for this part of the review sheet, we're just focusing on the general fund. So here's the assets. Probably have to go to the next page. And then here's the fund balance classifications. So you have non-spendable, which is usually associated with prepaid items, and then unassigned. Excuse me, right here, unassigned. Now these other ones are listed for your food service, your debt service, that kind of thing. So we're sticking just in this column. That's why it's important to kind of come over here and look at which line item is actually corresponding with that amount. So we'll go back to the review sheet. So here's those assets again. You can match up those if you wanted. And then I mentioned that the non-spendable amount, is usually associated with the prepaids, which you'll see that prepaids are $28,098. Over here you'll see non-spendable $28,098. So it does indeed match up to that. The definition of non-spendable is amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. So that's the definition of non-spendable. I won't go into these other ones that aren't utilized by the school this audit period, but these definitions are all in the audit, so you can look them all up. So unassigned, for those who don't know, are amounts that are available for any purpose. These amounts are reported only in the general fund. So that's where these are derived from, and those are what the definitions are. Again, if you want to look that up for review, that's directly from the audit, so you can find that information in your audit. Up here in the upper right hand corner, this is kind of a breakdown of the activities during the year from a kind of a broad perspective or a macro perspective. So there's the beginning fund balance, total revenues, total expenditures, other financing sources, net change, and then ending general fund balance. So that kind of gives a broad overview of what the activity during the year. Below that, we have a couple calculations that we do from these numbers up here. So we have general fund divided by revenues takes the ending general fund, divides it by total revenues, puts it in a percentage. General fund minus restricted is essentially the same calculation, just if there is a restricted amount down here, it would subtract that first, which there isn't, which is why these are the same. General fund divided by expenditures takes the ending general fund, divides it by total expenditures, puts that into a percentage. Before I move on to the last one, these two are kind of important to look at. So this one, if you read the state aid status update for February of 2015, you'll notice that in the governor's proposal on page 2, which is right in the center is where I'm talking about, there's a reference to this ratio. So it's important to look at that because the state looks at it. And then this one is one that the charter school office kind of focuses on. We like to see this at or above 10%. It's not, I don't believe it's written specifically in the charter contract, but that's something that we kind of look at and see if it's trending upwards or downwards, and then if it is, why. The reason we look at this one more so than the other one is the expenditures are more likely to be skewed by if there was a capital outlay or a program implemented, something like that, where the fund balance was kind of reduced because of that. So that's kind of why we focus more so on this one. It's less likely to be skewed in one particular year, so it's easier to see. The trend will look a little better. But there are examples that this could be skewed too if there's a large contribution or something like that. So it's important to look at both of these and understand why it's trending the way it is from year to year. And then also this one is focused on by the state, so it's important to look at that one in that respect as well. So finally, the last one takes the ending general fund balance and divides by the beginning general fund balance. Now, if it's above 100%, which it is, there was a positive net change. And if it's below 100%, that means there was a negative net change. Now, this is something you can look at from year to year too to see if this is trending upwards or downwards, and then try to understand why. So these are just indicators to try to explain what's going on, and it's good to look at from year to year the trend. So again, we wanted this one to be, we hope to see this one around 10%, so this is above what we hope to see, but kudos to you guys for fiscal management. So coming down to this area, these 4 boxes are derived from the note section of the audit, and then also the notes are included on page 4 of this review sheet, which we'll get down there in a moment. But these boxes are part of the template, so even though these ones are blank, I still included them on here, and I'll still explain briefly what they mean. This one is normally associated with a state aid note or other short-term borrowing. Many schools have to utilize a bridge loan to fill the gap in for that lost month of state aid. So that's kind of what this would be classified as if there was anything corresponding with Richfield Academy. Over here is the long-term debt. This is associated with the bond, the principal payment, and then the balance at June 30th, 2014 and July 1st, 2013. So that's what that summarizes. Again, this is the details of that is included in the note section of this report, so you can read that if you want to get more information on that. And then over here we have the leasing information. This is if a school doesn't utilize a bond to finance their school, a charter school, normally they utilize the leasing method. So that's what would be over here if there was a leasing method. Here is the management company information. Now, Richfield utilizes advanced education systems. So depending on what the definition of management company is from the school's perspective, that may or may not be considered a management company. But if there's an expressly stated fees associated with HR services, anything like that, we put that on here just for our quick reference if we need to quickly look that up. So that's what that's related to, because management companies do usually provide HR services, accounting services, that type of thing. So that's where this is derived from. This percentage here is not a contractual percentage. It is a calculation. So it takes the total fees, that $120,316, and then divides it by total state aid. And that's so that's where that's derived from. That's not meant to be implied to be a contractual fee. So this amount here takes the June 30th, or excuse me, the management fees, and then divides it by the fall 2013 count at June 30th, 2014. So that's just a metric you can look at from year to year to see the cost per student, essentially. So Down here we have square footage. If this is inaccurate, let us know. I picked this number up from the paper copy of the charter school contract in our office. I'm hoping it's up to date, but if it's not, let us know, and we'll just quickly update it and then reissue this this review sheet back to you. And these are all formulas, so the numbers will all update. But utilizing that square footage, the revenues per square foot and the expenditures or expenses per square foot are calculated, and then the difference. Now these are something you can look at from year to year too to see how they're trending, if they're trending upwards or downwards, and then try to understand why that's happening. Below that, you'll see payment per square foot. Now this is a little bit different from these other calculations. This for Richfield Academy, they're actually utilizing the principal and interest payment on the long-term debt. So I'm going to go to the 2013 audit. So this is at June 30, 2013. And then here's the long-term debt information. I'm going to zoom in a little bit so you can see a little better. So here's the June 30th, 2013 again. And then here's the long-term debt. If we go to the next page, you'll see the payment schedule. So here's the principal and interest amount. So here's where these are derived from. So there's the total that was utilized. So this is last year's audit, which showed the payment schedule for the current audit period, so the ending June 30th, 2014. So that's where that's derived from. I thought I'd show you that as a reference. So that takes those numbers and then divides it by the total square footage, and then that's where this payment per square foot comes out. Now, if the school had utilized the leasing method, I would just take the total lease payment for the year and then divide that by the square footage. So that kind of lets me compare the bonded schools to the leased finance schools for all of the charter schools in our office. So that's kind of why I did that. It's a way to compare the two financing types. Now, when I combine all those totals and then I average them out, Bay Mills Community College Charter School Office authorizes 42 schools in the state, and the average for payment per square foot is $14. So Richfield Academy is below that average, so in case anyone's interested. Over here, operations and maintenance takes scroll down, the line item of operations and maintenance and divides that by the total square footage. I took this number and I averaged that out for all the Bay Mills schools again, and that was $19. So Richfield Academy is below on both these respects. So, and then below that is the square footage divided by fall 2013. That is the total square footage per student based on the fall 2013 count, which is again the corresponding count to this fiscal year. So that could kind of tell you how much space you have per child. I haven't averaged that one out, but if you wanted to, I could probably throw that together. Moving into page 2, this is the general fund comparison. This lets you look at the actual at June 30, 2014, the actual at June 30, 2013. Again, these are both audited numbers, so these are directly from the audit. And then the difference, that just calculates the difference from one year to the next. So this is kind of a good page to provide the detail from that box, the upper right hand corner of page 1. So this lets you look at things really well, and again, these are audited, so this is kind of valuable information to look at. And then as this comes out from year to year, you can kind of put them side by side and look at the trends even more. So one thing that I had a question at a training, last year's training, is what these accounting codes meant. So I'm just going to briefly show a little trick that I utilize. So I took the Michigan Public School Accounting Manual and I put it into Microsoft Word, and then you can come up here, push Find. This is Word 2013, so I don't know if it'd be different if you have a different version, but in this version you come up, you push Find, or you can hold Control and then push F, and then that'll bring up this navigation bar over here. So basically, after you do that, you make sure you're on Results, type in what you're looking for, and then you can actually skim through this document and find things pretty quickly. So if you want to know what basic programs are, here's the accounting code. And then basic programs are instructional activities, including enrichment, designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. So I won't continue reading to you, but if you wanted to, you could do this and then scroll down. You could see all the different classifications. So it's important to know what that stuff is. Now, before I move back to the audit review sheet, it's important to note that you have to have a focus search. You can't come in and just type instruction because it's in here way too many times, and Microsoft Word cannot do that. So Just kind of know you got to be focused with your search, but you can find things pretty easily. So I'll go back to the review sheet. So this should let you compare from year to year, and you can look at why something changed. From the board can look at why things changed and why they didn't. And then moving down here, this is the budgetary comparison. These are derived from the audit as well. The original budget, the final budget, the actual. If you notice, I have this note here. This states that the original budget is due July 1, which is well before the school year and before the count date. So there's sometimes a large discrepancy between the original and the final budget for that reason. So that's just a note, a reminder for myself and others. Budget difference takes the difference between the actual and the final from a dollar standpoint, and then the percent change is a percent change between the actual and the final. So moving down, we have instruction as a percent of revenues. So I'll scroll back up for a second to show you what this is. So this takes the total instruction costs, expenditures, and then divides that by the total revenues, and then puts that in a percentage. So it's kind of a proportional thing. So you'll see the trend: 45%, 46%, 44%. So I'll scroll back up for a moment. So you'll see that the percentage actually went down from 46 to 44, which may be initially as an indicator that there was less money spent. But it's important to understand the relationship that's going on with that calculation. So you'll notice that instruction expenditures actually increased from 13 to 14. So that it's important to note that that's a proportional calculation. So though instruction expenditures did increase, revenues increased at a faster pace. So that ratio is not absolute in saying that you're spending more or less. It's an indicator, and it's important to understand what that indicator is saying. So it's a proportional indicator. Another example relating to the instruction expenditures is if you had a teacher that was making $50,000 and he or she resigned, retired, or whatever, and a new teacher was hired for $30,000, that would actually lower the expenditures while not necessarily impacting revenues or instruction. So we could get into the argument about quality of that instruction, but for the financial purposes, that's an example of a reduction in expenditures while not necessarily offering less from the school's perspective. So it's important to understand the ratio, what's going on here, especially since it's semi-misleading that the ratio goes down while instruction expenditures actually increase. So this is an example. That teacher example is one I've given several times, so that's something to keep in consideration. So then scrolling back down here, the average for the Bay Middle schools was 44%. So Richfield Academy is right on as far as the average is concerned with this calculation. So revenues divided by fall 2013 and expenditures divided by fall 2013 takes the total revenues, total expenditures, and divides it by the fall count, and then the difference. So this is something you can look at from year to year, and then try to compare it and contrast it. I haven't averaged these ones out either, but again, if you want any averages, I can figure it out. Just maybe take me a little time. I'm almost done with these videos though, so I plan on trying to go through this data a little more after I was finished with these. So moving down to page 3 is the enrollment data information. These numbers are derived from CEPI, which there's so many acronyms in education. I'll explain that CEPI stands for the Center for Educational Performance and Information. This is a state-operated website. So you could come down here to My School Data. You got to go through a couple filters. Then you'll see here's some of the filters you could use: student count, non-public student counts, free and reduced lunch counts, special education counts, graduation dropout rates. So here's the student counts. These are large spreadsheets, and they go down to 91, 92. So there's a lot of backward data if you wanted to come backwards and look at student counts. And then free and reduced lunch counts are just below the student count. So that's where this stuff is derived from. Now, if you notice, I didn't highlight the last one. That last one is actually an unaudited number from Epicenter, which Epicenter is the file exchange program utilized between the charter school office and the charter school. So that's the program that lets us transfer files back and forth, basically, and then everything's tasked and time-stamped and everything automatically. So utilizing that program, I received a form called the DS 4061 form, which is the unaudited account data. So basically, this number is subject to change if the audited numbers differ from what this number is. So I just wanted to make that everyone aware of that in case next year that number changes. So there was not any confusion related to that. So over here, these are percent change calculations from count to count. So these are for our numbers people who like to see the percent change calculations. And then below that we have our graphical display of the count data to show the trending visually for our visual people. So hopefully everyone's happy between the numbers and the visual display. So, and then below that we have the free and reduced lunch counts, which takes the, these are from SEPI again where I just showed you. And then over here this takes the free and reduced lunch count, divides it by the total corresponding fall count, and then puts that in a percentage. So that's where these are percent free and reduced lunch. And then down here we have our graphical display of the count data. So this displays this data here for our visual people again. And then page 4 is the notes page of this review sheet, and they are derived from the notes section of the audit. So you'll see the debt information. This is what's referenced in that those 4 boxes on page 1. So the bond information is listed right here, and then here's the corresponding page numbers that are referenced from the audit. So if you wanted to go look this up in the audit to see the tables and that thing, because I didn't put all the tables in here, you could go just look these pages up, and then that's where it's at. So this is the debt information. I won't get into that again. I've already kind of discussed that. Here's the management company note. This is again directly from the audit. And then this just talks about the agreement with Advanced Education Systems. And then I highlighted the agreements for a 2-year period because we usually like to keep track of that. And then also because I wanted to make sure we had the updated agreement because this expired June 30, 2014. So that's something I got to check on. So it's bolded for that reason. It's just usually a reminder to myself to do something. And then page 416, that's where this is derived from in the audit. Findings. There was none, which is good. Out of our 42 schools, there was 8 total findings. 4 were from small schools or kind of auditor findings that were just relating to kind of covering the auditor's back, lack of segregation of duties that the cost didn't justify it. So there was 4 of those, and then there was 4 other findings that needed corrections, and the auditors noted that those corrections were put in place. So kudos to you guys for having no findings, and Bay Mill schools have done pretty well this audit period in relations to findings too. So good, nice job. Moving down, the BMCC notes. This isn't actually all BMCC notes. This is anything that isn't classified as management company or debt related. So you'll just see that I have a note here from the auditor about the net position increasing from page 3.3. And then this calculation, this is the payment per square foot calculation. I wanted to make sure I wrote down what I stated on this video, where I got the numbers utilized for that calculation. So that's what this is. So hopefully that all made sense, and then I showed you where that was derived from on last year's audit, the 2013 audit. So hopefully that all made sense. So this document is reviewed by Mariah Wanick in our office, and my contact information is albertb@bmcc.edu. We hope this was a benefit to you guys. Again, this replaces the regional board training that we had last year for the annual report. This report was pulled out, so not to be confused, if you wanted to compare this data to last year's data, you could go dig up that annual report and then compare the two. My information was included in that, but it wasn't the sole information provided in that document. So thanks for all you do for the children of Michigan. Have a good one. Take care. Bye.